Pretty interesting day. A lot of chop, but ended pretty positive. Apple might spoil it this afternoon. I got a quick thought on that in a moment. But firstly, go to the risk radar because I think bonds might need a little bit of a readjustment here. Nothing's changing on the dollar, but the red light that's been on bonds, I think we're seeing a little bit more neutrality show up. It kind of looks like it's time to think about a range possibly. So a yellow there to reflect perhaps consolidation in the treasury market. Today had a lot in it. Firstly, though, real quick on Apple. I don't know how these numbers justify valuation as high as it is. iPhone actually printing a negative number annually. That's not good. Missing expectations as well on the China side by a huge amount suggests they're getting undercut even more there. So on Monday, Apple caught a bid because the rest of tech was undercut by a Chinese tech product. But that's kind of the main story happening for Apple right now, so I'm not sure why they're rallying this week. So right now there's a little chop in the aftermarket. Apple shares may be coming off a tad. Let's go to bonds, though. Bonds right now, I think, have a pretty decent case for them to see a little bit more back and forth. My default baseline trend still, I think you have to respect this, and we haven't really violated it at all since the September low. 10-year yield still making higher highs, higher lows. But as you see the reaction to tariffs and you see the reaction to Fed commentary and the data, it looks like there's a little bit more of potential pushback here. We've seen a little flattening of the curve as well, where the main part of this trend was defined by yield curve steepening. So that also suggests maybe some of the momentum is slowing on the long end's upside. Also, I think there's a little bit of a mistake the market might be veering into when it comes to its tariff analysis. If you look at the dollar today, the dollar shot up on the tariff news on Mexico and Canada, and that's probably very appropriate. I do think that's why the dollar holds the green light, because it has that kind of tariff bid under it, which makes some sense. But it doesn't make quite as much sense to sell bonds as hard on tariffs because of that feedback loop that exists in the treasury market, which basically goes something like this. If you issue tariffs and it threatens the economic potential and the stock market doesn't like that, and so stocks come off, that puts a bid back into bonds. It also, if you change anything economically that slows down the growth that we've been getting, I'm not saying tariffs would do that necessarily, but it does kind of raise that specter of it if you artificially change prices. Even though that price shift that comes from tariffs might seem inflationary in nature, there is a feedback loop you have to respect in the market, which is negativity from risk assets and stocks push a bid into bonds. And so the dollar moved really strong today and held it, but the bond market more had some pushback. So I think the yellow light for bonds is appropriate. Stock's still green, but Apple looks vulnerable here to me. Have a great night.